Two subs and one associate. Sun is in dollars, Yat is in dollars, Sen is in dinars. Yeah, so Sen is an overseas sub, and that makes it a nice twist. The following information is available. Now, when I look at that profit and loss account, I don't see anything in there that is of any interest to me whatsoever. It's a bog standard profit and loss account. Yeah, you've got other comprehensive income with a revaluation gain of PPE. So it's very unexciting, it's very vanilla, yeah, and the only thing of interest is that every figure in Sen is in dinars, so that will cause a problem. Paragraph number 1. If we are to follow the style of the examiner, everything in paragraph number 1 will be about Yat. And it does appear that it is all about Yat. Alright? And paragraph number 2 should be all about Sen. And paragraph number 2, it is about Sen. So the structure of the exam paper lends itself to compartments. You do not have to read the whole question, because you will get a headache if you read the whole question straight away. What you're doing is you're skim reading and understanding that the question has sort of compartments, has rooms to it. Paragraph 3, there's a reference to an intercompany sale. Paragraph 4, there's a reference to a relationship with Mirror, which is an associate. Paragraph 5 is really important. I don't know where paragraph 5 has gone. But then we have paragraph 6, which is the exchange rates. Now, in the exam, you would have paragraphs 7, 8, and 9, probably, because you could be told about, oh, there's a share-based payment that we haven't dealt with. Or, oh, there's a finance lease that we haven't yet dealt with. Or, oh, there's a cash flow hedge that we haven't yet dealt with. So there would be then accounting issues outside of group accounts that would then be part of the question, but they would be dealt with in turn. So I feel fairly happy to begin in detail reading about Sun, reading about Sun acquiring Yat on the 1st of January 2009. So Sun acquires Yat and acquires an 80% interest in Yat on the 31st January 2009. How long ago was that? 6 months ago? 6 years ago? 3 years ago, yeah, 3 years ago. So there's no need to time a portion from an acquisition point of view. The fair value of the net assets was this, the NCI is that. At the date of acquisition, there's a fair value adjustment. 20,000 of that is to do with plant. We account for NCI at fair value. Goodwill is in full. Goodwill is impairment tested. And there's an impairment loss, which will go to cost of sales. On the last day of the accounting period, after the impairment review, we've sold some shares, leaving us only owning 10%. So on the last day of the accounting period, there is a disposal, and this disposal takes place at the year end. And therefore, because it's on the last day of the year, we won't effectively time a portion, but we will have to calculate the gain on the group. We've got a lot of information there, and the disposal does not constitute a discontinued operation, and therefore the presentation will be on a line-by-line basis. Okay. Can we have a planning committee, please? What workings are we going to do? Disposal, yeah, that's one working. Yeah, you said it all. I've heard it all. There are 3 workings to calculate. The depreciation expense, there's reference to a fair value adjustment, there's a depreciation expense. there's an impairment loss, there's reference to an impairment loss, and there's reference to a disposal. 5 minutes, you have a go. 5 minutes, you have a go. Yeah? Can you calculate the depreciation expense? Yeah? Can you calculate the impairment loss? Can you calculate the gain on the disposal? You have a go.